There are three ways we can define support and resistance. Determine support and resistance areas using psychological points. Determine support and resistance areas using indicators such as pivot points and Fibonacci levels. There are also price action tools used in determining support and resistance. These tools can be chart patterns or candlestick patterns. Number 1. Psychological support and resistance. Traders sometimes use price levels that end up as round numbers as their exit targets. These round figures then form support and resistance areas when there are enough of those targets to form great offer demands around those numbers. This is why these areas are referred to as psychological support and resistance areas. Round figures refer to prices which typically end with zeros such as 1.200, 76.00, 52.00, 1.8900, etc. These are not usually very reliable areas of support and resistance because there's no way for the trader to accurately gauge whether an offer demand has formed in sufficient quantity to cause those price areas to hold. The second way we can define support and resistance is by indicator-based support and resistance. Indicators can also be used as a basis for support and resistance. Two very good indicators that make themselves amenable to this are pivot point indicators and the Fibonacci retracement tool. The pivot point indicators are any custom indicators that are able to trace the daily, weekly, or monthly pivot support and resistance points on the charts. Usually we calculate the pivot points using the price data of the high, low, and closing prices from the previous day's trading. With this data, 7 daily pivot points are derived. A central pivot, shown on the charts below in purple, 3 support pivots, shown in green, and 3 resistance pivots, shown in red. The pivot points don't behave as they are strictly described. Depending on the price action, a resistance pivot may function as a support, and a support pivot may act as a resistance. In both situations, this usually occurs following a breakout and an attempted pullback of price action to the broken pivots. This chart above shows the pivot points as plotted by the pivot point calculator. The Fibonacci retracement tool draws up to 5 levels to which the trending price can retrace to, thus providing valid areas of support and resistance. However, the use of the Fibonacci retracement tool is best left for the experts. The third way we can define support and resistance is by price action S&R lines. We can determine price action also according to where support and resistance occur. If a particular price level has functioned as a support or resistance level in the recent past, it's likely that traders will respect those levels with prices attached to them. If a particular price level has functioned as a support or resistance level in the recent past, it is likely that traders will respect those levels when prices approach them, as the sentiment at the time may indicate a recent support as an oversold area or a recent resistance as an overbought area. The chart above shows areas where support and resistance was formed by the price action as depicted by the candlesticks. We can use these trend lines to delineate price lows and price highs, and when superimposed on a chart which already has indicator-based support and resistance tools, such as the pivot point indicator, they can provide very sound basis for trading S&R lines. That's it for now. On our website you can find more posts as well as calculators and other financial tools. I hope you enjoyed it, and don't forget to subscribe to our podcast channel on YouTube. We would love to know how you use support and resistance levels in your trading, so feel free to share them in the comments below.